the value of Hummingbird is massive. The onus is on us to deliver, and that means being reliable and showing performance for the next couple of quarters, which is the key. So for me, I want to build financial discipline. I want to focus on free cash margin so we're protected. I want to build a reputation as someone that can operate and deliver, and then let's see where it takes us.
Hello and welcome to our viewers on Crux Investor. We're here today with Dan Betts, who's the CEO of Hummingbird Resources. We're going to talk through a number of topics. If you look in the description below and click on the relevant timestamp if you want to look at those topics specifically. Also, if I can ask that you click the button in the corner of the screen to subscribe to our YouTube channel. If you want to see more videos like this, click the notification bell. How are you?
Very well, thanks.
Good to see you.
Good to see you.
We saw each other quite a few years ago, as we were just discussing.
Yeah, bits changed since then.
A lot has changed since then. You're doing great things. So why don't you kick off and give us a 1 minute summary?
So Hummingbird is a gold producing company. We have a gold mine in Mali called Yanfolila that produces in the region of 120,000 ounces of gold a year. Mm-hmm. We started as an explorer. We still have an exploration project in Liberia. Mm-hmm. We took that through development and we did M&A. We acquired the Yanfolila project. We financed it, built it. So we're slightly unusual in that regard, in that we've been through the entire mining process, I suppose, from grassroots exploration all the way through to today where we're a producer.
Great summary. We were just talking again before the cameras came on. You're sort of ninth generation now, is that right?
Yeah, so not in Hummingbird. So to be clear, if you go back, yeah, Hummingbird's been around a while, but not 9 generations.
No, but you were telling some interesting ways that people used to find gold in the streets.
Yeah, under Hatton Garden in the sewers, and gold washed down the tanks and all the rest of it. But our family business is a gold refining business based in Birmingham, and my brother and I are the 9th generation, and it's through that business that we had a network in the gold world, and that Hummingbird's origins started, I suppose.
So, but now you're in Africa with Hummingbird.
Yeah.
I've worked in Africa for quite a few years. It can be a great place to do business. It can occasionally be tough. It's fair to say.
I think always tough, but it's exciting.
It's exciting.
Yeah.
Right. Okay. But you've had a sort of interesting last 18 months. So we knock some of those things on the head and talk about those, because you are producing plus 100,000 ounces, so something's going right. But let's deal with some of those small fires that you've had to deal with along the way.
Yeah, well, I think you're probably only as good as the challenges you overcome.
Sure.
And I remember my first chairman was a guy called Ian Cockrell, who was the CEO of Goldfields. And when we were discovering gold in Liberia, and then we listed the company and everything was seamless and going smoothly, he said, "You have no idea how lucky you are." He said, "Mining is a difficult business." And he was right. I have those words ringing in my ears now. So the last 18 months have been challenging. Yeah. I mean, we built Yanfolila on time, on budget. We ramped it up, and everything was going great guns. And then we had a few operational issues. Right. Difficult to summarize, really. I mean, a number of different issues hit the performance, and it's been really 12 months of working through those, whether they are geotechnical issues with the pits and the wall stability, which is well documented, recovery, dilution, mining issues, performance of the plant, just building a business, building the team. And we're here today and we are producing on budget, on our nameplate capacity, to the costs we originally thought, and we've overcome a number of challenges, which I suppose are inevitable as a new producer without experience. Looking back, I suppose we could have anticipated a few of those challenges better, but I think, touch wood, we've come through them.
I only ask because I think it's important for people to understand, investors, to understand the complexities of doing mining. I repeatedly say mining is tough, and you need to find workarounds and get to the end point, because people only care about the end point. Okay, so you've had flooding.
Yep.
To deal with, so you're having to reinforce pit walls, etc., and that impacted production slightly.
Well, so if you go back to Q4 last year, it impacted production significantly. Q4 last year and Q1 this year, we were way down on production, and obviously that impacts your costs, and the AISC was way up. We had to do a considerable amount of extra waste moving on the pushbacks of the walls to accommodate this wall stability issues, and as you also say, dewatering extra pumps, extra weep holes, extra resources into the dewatering of the pits so that it wouldn't happen again. But today it's October, middle of October, and we're at the end of the subsequent rainy season.
Yeah.
And Q3's results, which are just out, are good through the wettest quarter. So I think we've learned a lot from the trials of last year.
Yeah, okay. And then you've, of course, the Taurus situation. That's now resolved.
Yeah.
What happened there?
We've settled with Taurus. Mm-hmm. We've taken a very practical approach to the claim they brought against us. Mm-hmm. I think it shows that we're able to be practical, not emotional, and I think that's in the past. I think best we move on from that one. Okay,
fine. That's fine. And I think I'm just trying to show people that business mining is a complex business, and the things come along, curveballs come along, and you have to deal with them and move on. So I appreciate you dealing with it.
No, that's absolutely right. They do.
Yeah, they do. Anyway, let's talk about the business. Okay, so you've forecast this year to produce what? How much?
So our guidance is 110 to 125,000 ounces for the year. It is meaningful, and we were well behind the curveball after Q1.
Yeah.
So we are maintaining that guidance. So I can talk to Q3's numbers, which are just out.
Yeah.
Where we've just done just over 30,000 ounces for the quarter, and the AISC for the quarter is $850 an ounce. So a great result, really.
That's a great result. It's significantly down from where you've been, obviously.
That's right. So if you look at the last 4 quarters, we've had reducing costs and increasing production quarter on quarter as we've come to terms with and overcome the challenges that we've already talked about. And that means we're deleveraging fast. We're paying down the Chorus debt quickly.
Where are you with that?
So I think total gross debt at the moment in the company is about 49 million or so at the end of Q3.
Okay.
So by the end of the year, it will be more like 32 when we've paid down all the other loans and things in the business. So 32 million gross debt at the end of this year will be in good shape. Well,
for sure, and obviously with the gold price where it is, all the producers have had a nice little bump since August.
Yeah.
Which is great, and that's good news for you guys. So you're producing cash. You've got to get that balance between paying back at a rate which you're obliged to, and also keeping enough money in the business to grow.
To grow and to accommodate unforeseen issues. To be prudent. But yeah, that's right.
Okay, that's exactly what I'm talking about. It's having that capacity to deal with these things as they come along. So let's talk this, if you don't mind, talk a little bit technical about Q3. Have you seen grades continue as you expected, or are you having to get more out of the ground to get those ounces? No, the grades in Q3 have held up as per the plan. So to be honest, Q3's performed as per our DFS and our studies. It's performed how we expected it to perform. So I'd say we've got back to where we expect to be. Right, okay. So again, I'm just trying to understand where the company's going to. So you're producing cash, the margins are increasing because your AISC is down, obviously gold price is up, you are continuing to hit targets. What are you going to be doing with all of this cash? I know you've got some debt to pay down, but what are you going to do in terms of the growth component to this? Is there a growth component?
Well, initially the priority is to, one quarter's not enough, to do Q4 and Q1 and to build the reputation of a proper mining company that can deliver. Yeah. So that's our first priority. And I think, a lot of people say, Hummingbird, it's trading at a discount to free cash flow multiples and all the rest of it. But I think it's fair enough people to be a bit cynical having travelled the last 12 months with us. So the onus is on us to deliver. And that means being reliable and showing performance for the next couple of quarters, which is the key.
Right.
I don't think, people want to get carried away with, when you're paying a dividend and all the rest of it. Let's just get the job done. What's the saying? One sparrow doesn't make a summer and all the rest of it. That said, Yamfalila has a relatively short mine life. It has resources outside of the mine plan, and extending that mine life and investing in exploration and underground studies and other deposits that we bring into the plant are a focus and an increasing focus. So I would say in my mind, if I'm looking at risk, number one risk is you've got to deliver to plan. because we failed to do that over the last 12 months. We're now doing it. We've got to show that we're reliable and trustworthy. But, pretty close second is to extend the mine life and show the future of the project. And, ultimately, further than that, show that Hummingbird has more to offer than just Yamfalila. So much of my time and effort has been about building a business and a team and skills and people and a board and relationships all around the world, and how do we leverage off that to take it forward and build real value. And ultimately, Yamfalila is a relatively small, relatively complex mine. That's what it is. You can't change what nature put there. So if that's our school and we turn that to account, we prove to be a reliable, efficient mining company, for me, that's tremendously exciting. I mean, think what we can do with that and what we can build and go forward. But that's slightly more nebulous, right? It's intangible and in the future, and let's just stick to our knitting and get Q4 on the money, Q1 on the money, and build out the tangible future.
I think that's right. Like I say, you've had a few bumps along the road in the last sort of 12, 18 months, but you've dealt with them, and you're hitting numbers. And the market's gone with you in terms of price of gold, etc. And you are doing all the right things in terms of driving the ASIC down. So you've got a whole bunch of skill sets in house, but you do have this short life of mine, relatively, and you do need to do the things you just talked about in terms of showing growth potential, alongside delivering over the next 2-3 quarters for the marketplace, because your share price is, it's been relatively erratic, I suspect, because of the reasons you've already said. But what are the existing shareholders saying to you in terms of, are they say, well, just let's steady the ship and we're still here, or are they making demands?
I don't think there's a consistent answer to that. I mean, every shareholder has a different view and different conversation. But I mean, generally speaking, the view is, be sensible, pay down your debt, manage your cash flows, deliver to your performance, and the value will come through.
Yeah.
And I mean, I agree with that. And for me, it's always been a game of, you've got to keep your options open. Things change, the game changes, the markets change, gold price change. And if you're absolutely dogmatic about, this is what our 10-year plan is going to be and we're going to execute it, it's not going to work. I mean, we'd have gone bust carrying a huge project in Liberia and not being able to fund it.
Yeah. Well, let's skip on to Liberia momentarily, because I think last time I saw you, it was many years ago. Yeah. Liberia was something we were discussing actually back then. So what's happened? What are you doing with that? Is there any value there?
Oh, there's tremendous value there, but not in our share price. I mean, we own a 4.2 million ounce gold deposit in Liberia, which we hardly touch the sides of. I mean, if you actually, knowing what we know now, if you go back to how little we knew then, we found 4.2 million ounces of gold on a discovery cost of $7 an ounce, never hitting a blank drill hole. I mean, it's actually an extraordinary success. Yeah. And then the story kind of took over, the market took over, and the market tanked, we couldn't fund it, it needed to be big, the capex number, all these issues. So
was there Ebola somewhere in there?
Ebola, everything. And then we compounded all of that by doing an M&A deal, funding a project in Mali and building it. And actually, for the last 4 years, Liberia's really been on care and maintenance.
Yeah.
But we still own it. Gold's now 1,500. There's a lot more interest in deposits like this. I mean, if you look at Cardinal Resources or someone like that, there's a lot of similarities, right? Except the only thing that's big difference is ours is worth zero. So in terms of optionality and ways to create value, I'd say it's a massive optionality for Hummingbird.
But okay, let's talk strategy. Okay? Yeah. So you gave an example. You've got Cardinal building up the ounces next door in Ghana.
Yeah.
Quite close by, reasonably close by. You got Rox Gold. You've taken a different strategy. They said, no, we've got a short life of mine. We're going to get straight into production, generate some cash, and buy another asset, which is what they've done with Crux, right? So two different strategies going on there. So what are you guys thinking of doing? You've hot-footed it from a management meeting.
Yeah.
So you discussed various things. Is this something that's on the table at the moment, or is it still in care and maintenance mentally?
No, so I think the environment is right to take Liberia forward. In terms of strategically, and this might sound like a bit of a non-specific answer, but what I want to do is create value. Create value for Hummingbird shareholders, for the market to go, oh my God, we've forgotten about this, there's value there. Now, does that mean I need to build it? I'm not sure that will create that much value, because people will see it as a challenge for Hummingbird, and we're a small company. Dilution, where's the capex going to come from, all the rest of it. If I could attract partners, investors, in a way that suddenly Liberia was being re-engineered, or the 4.2 was becoming 5 or 6 million ounces with redoing a feasibility study because power costs could have changed, and different ways of looking at that. I think there's tremendous potential with fresh pair of eyes 4 years later to come back and go, wow, this is like the most exciting exploration province in West Africa, which I believe. Right. Let's take another look at this. And if I could do it in a way that was non-dilutive to Hummingbird shareholders, with a partner who had the credibility, skills to do that.
I mean, for 4.2 million ounces, you got Cardinal next door with coming up, where between 5 and 7, some I can't quite remember. Whatever their market cap is, $130 million, something like that. And there's a bunch of other people with various sizes, because the Burundian greenstone is prolific, right? There's a lot of companies there. What type of company is going to, or strategic partner, someone who's going to come with money and skills, are you looking at, or have you spoken to anyone, or is it just a consideration around?
Yeah, it's a consideration. I mean, I don't have any scoop to disclose for the purpose of the interview, but I'm talking to lots of people, and that's the answer. And they're varied and diverse, and they're not all just capital markets listed in Toronto or London, or Australia. It's a more diverse world than the investment community realizes, I think.
No, for sure. We've spoken to a lot, but I always ask the management team about the thinking. What's going on up ahead? What's the strategy? What's the business plan? How are they going to deliver it? Who's going to deliver it? So you talk about it may be zero value attributed to the Liberian asset at the moment, and you say, I'm going to try and create value there. We're thinking about how we go about doing that. So I'm just interested in that process and timeline, and how much money do you throw at that, how much internal resource do you throw at that before you can bring a strategic on board. Okay.
You need to play the cards as they're dealt, and it depends on the conversation you have with a potential partner and how they want to structure the deal and whether it looks attractive. But in terms of strategy for taking Hummingbird forward, I think our focus is more on free cash margin, trying to focus on a lower cost producer of a more manageable size in places where we think we have a competitive advantage. Now, we have a competitive advantage in Liberia. I mean,
it's not much.
We've been there for over a decade and we know everyone. But the rest of it doesn't really fit with that strategy. It's going to be a big mine. It might fit better with somebody else's strategy, but we can help them in a way that nobody else can. So in terms of being involved in the journey, taking up the value curve, fully involved in that. In terms of actually building the project, I'm miles away from that.
Yeah.
If you see what I mean.
Yeah, but there's a lot on the table.
That's right. Yeah.
It's whether you call it stars align or everything comes together. You've got the optionality because it's not costing you time or money per se at the moment.
Yeah.
And you're producing cash elsewhere, quite a lot of cash elsewhere. So let's come back up into Mali.
Yeah.
Okay. Obviously the plan. What else are you sitting on apart from the mine itself? Have you got a lot of greenfield, brownfield, exploration, development going on? What else is happening?
So in the country, that's a big question. But I mean, if you go to our mine permit, there's a number of deposits ranging from resources that we are doing studies on for underground or extending open pits or bringing in other open pits into the mine plan. But also there are targets to find new resources. We've also got the largest shareholding in an exploration company called Cora Gold, which was created by us as a joint venture with some colleagues of ours. Right. And we'll keep a watching brief on that and see how that develops, because that could also provide potential feed ore to the Yamfalila project and also provide extending the mine life. So that's our thinking behind that.
Okay. How much of that do you hold?
Give or take 20%. I don't know the exact number.
So that's exploration optionality for you. Have you got any agreements with them, or was it just an equity position?
No, it's just an equity position.
Okay. So, but back on your own assets, things that aren't under your control, where are you spending time and money in terms of? I get that you focused on generating cash and free cash flow and paying down debt and all that. But on the kind of growth component of the story, just if you can just tell us a little bit about what's happening in country.
So, sorry, to be specific, do you mean on our license, or do you mean general M&A heads up what's going on in the country?
Well, a license is talking about if there's any M&A, it'd be great to hear that.
Yeah, well, there isn't.
Okay, that's a nice short Okay. On your license.
Yeah,
so what's specifically happening is day. What is the board charged the management team with doing on that front?
Right, so really, if you go back to, we have to go back 12 months. We have to go to when we had issue at the pit, and we basically closed ranks, did this pushback, focused on cash flow and survival and performance. We cut our exploration spend last year to accommodate that. And really, for the first half of this year, it was all about working through the challenges. So it's really only now this quarter that we can lift our head up again and focus on the wider picture and building the business. But I mean, a lot of work has been going on in terms of conceptual studies for potential underground extensions to the pits, to the Gonka resource, Kamana East resource and Kamana West, and also other identified resources such as Sanamali East and West that we could look to bring ore into the plant. And what would be good about that is they're oxide resources, so they'd complement the fresh rock as we get deeper in the pits. So that's what we're focusing on.
Okay, so you generated some cash.
Yeah.
Right, and I know you're paying down, you've got a little bit of debt, you'll have a lot less at the end of the year, which is great. How do you use that? I mean, do you fall into the kind of producer trap of basically any money you generate has to go towards trying to generate more ounces in the ground? Would you leverage yourself? I know you've got a bit of debt, but can you get more in there? Debt, that is, so you're getting non-dilutionary.
Well, it's a catch-22 because people will only lend you more debt if you've got a longer mine life to borrow against, right? So you, but
you know, you talked about dividends earlier, for instance, right? And you're not paying dividends now. It'd be crazy to. But at some point, shareholders are looking at that.
I'd love to be a dividend-paying gold miner, but you don't want to do it at the expense of the future of the company. So it's a balance. I mean, what I always said at the start, and I'd like to get back to that, is, you know, be disciplined. Don't spend more than 15% of your free cash flow on exploration. And with that 15% of free cash flow, replace and increase your reserve base.
That's a great number.
So that was, and it just kind of feels right based on experience, I guess.
Right.
But that's kind of where we're at.
Okay, understood. Now that's an interesting number. No one's ever put a percentage or a number on it.
Well, I think trying to build a discipline into that sort of thing is important.
Brilliant.
And you know, we haven't been able to because we've been fighting different issues, but you know, we need to now apply that discipline from here going forward, I think. And in terms of dividends, I mean, it's a question that goes round, and again, it's a catch-22 because mining is extremely dynamic, the markets are extremely volatile, and you commit to something and you're a small single asset project like ours, and something goes wrong, then you're not going to be able to repeat it, and then you're going to be exponentially punished because you didn't maintain your dividend or improve it. That said, it would be great to return excess cash to shareholders. I mean, what else are you going to do with it? Unless you find an outstanding project.
Well, no, it's always nice, and the management team say it's always nice to do that, and we want to do it. But it's, you know, how do you plan to put yourself in a position where you're able to do that? Clearly, the current market, or as in the last quarter, and hopefully going forward with the price of gold, you can, but
yeah, it might not last.
It might not last.
But I think we want to build a gold business, and I don't have a roadmap for exactly what that will look like. If you know, going forward 10 years. So you want to maintain some optionality, but you want to build a reputation for being disciplined and prudent. So for me, conceptually, if you get to a position where you're net debt free, you know, your cash and your gross debt meet zero, it would be nice to signal something to the market. Now, whether that's a dividend or a special or a buyback or something, I'm unclear, and this isn't happening right now, you know, but we need to start thinking about it as a board now and next quarter and early next year, because hopefully it will happen quite soon.
Well, the other bits are, you know, steady appreciation of the share price.
Yep.
Steady, not meteoric, not hockey stick.
That'd be good.
again, we all love that, but that's unrealistic. So steady growth there, so people, and a bit of liquidity in the stock, so people can get in and out and feel they've made some money with you. And this getting guidance from the company as to the things that they're putting in place to help accommodate that, and as best one can.
I know that everybody that invests in Hummingbird, myself included, heavily, is you see the share price. It's there. It's on a screen. This is what you're worth.
Yeah.
It's not what you're worth. It's the price.
Yeah.
We're back to that age-old argument of price versus value, and the value of Hummingbird, it's massive. The relationships, the people on the management team, the experience, the problems we've overcome, the experience, those are all intangible values. They're not in the price. So we have to leverage that value, and over time, it will come through in the price.
Yeah, I mean, if you cold, harsh view of this from a shareholder who's bought in at one price and they're sitting 20-30% lower than that, I'm not saying the US are, but if they were, you can sort of say, well, all of that doesn't really matter.
Don't I know it?
At the end of the day, I'm sure you get those phone calls and emails too.
Yeah.
But that's where, I think it's a great story. Okay, I mean, I think you've dealt with some pretty tricky things and still continue to produce. So it's all, I'm not down on the company. I'm just saying, from your perspective, thinking of the shareholders current and new to come in, it's giving that guidance as to what the future looks like. And you've done some of that today, but a bit more of the growth component to when, and you're at a point where you can do that. I don't think you were there yet.
Yeah, but I mean, I take you back to when we listed Hummingbird, and we raised some money specifically to explore, to take a small resource as large as we could take it. We didn't even have a target. Yeah. And over the next 3 years, we found 4 million ounces. We were the most successful explorer in West Africa. And what happened to our share price? Went down 60%. So even if you deliver on what you say, if the market, if you're the wrong side of the market, you're going to lose. So the market wants one thing. But the market wants one thing, whether it's value or growth or discipline. And then lots of people chase that and they say, okay, this is what we're going to be. And then the market changes, right? So for me, I want to build financial discipline. I want to focus on free cash margin so we're protected. I want to build a reputation as someone that can operate and deliver. And then let's see where it takes us.
Okay. I think it's a great place to finish. That's been a great summary. I'll shake your hands.
Thanks very much.
Great to catch up again. I think that should be fascinating for people new to this story. I'm not sure who's new to it. It's been around a while, but also quite a good explanation of what the next couple of quarters looks like.
Yeah, brilliant.
I hope you continue to deliver those. Stay in touch. Let us know.
Thanks for your time.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.